dollar américain continue to price.
Ladies and gentlemen, fellow traders, welcome to Jitney Trade TV. This is Xtreme Xpiry for the month of October. My name is Nicolas Méfé, and I have one passion, that is options. What a month this was. Now, let's go see what's on the menu for the economic calendar this week. On Tuesday, the 14th, we have U.S. Red Book retail sales. On the 15th, Wednesday, we have retail sales PPI, and Mr. Bernanke is going to speak at the New York Economic Club. And let's see, Thursday, we have the CPI, the housing index, and on Friday, we have housing starts and consumer sentiment. Now, let's go to our Fetish indicators, and believe me, they moved quite a lot. Now, for the VIX, we can see on this chart here that on a daily basis, when it broke those closing day highs at 37, I mean, the dam simply broke. The S&P went into a free fall, and down and down she goes. Nobody knows when and where it will stop. Let's go see on a monthly basis. Oh, sorry. We're going to check out the Bollinger Bands with the dailies for the VIX. We can see here that the VIX has totally punched through the envelope of the BNB, which means that it is totally but completely unpredictable. The vertical range is at nosebleed levels right now. It's over 100%, which is completely insane. If we go look at our monthly picture for the VIX, we can see that this latest move really took us out of the long-term quadrants we defined a summer ago. Now, we have no way of knowing if this is the final move, if this final move is indeed an exhaust. But one thing is for sure, I mean, we are in a terminal phase. But I mean, the top on the VIX is open-ended. Okay, so let's go see at the put-call ratio on a weekly basis. With this completely insane move in the VIX and downward spiral on the S&P, we have not even seen an extreme reading on the put-call ratio, which is kind of worrisome. So either discard it and you think that it is not reliable at this point, or it is truly it is bothersome. On a daily basis, it's pretty much the same picture. We can see that there's absolutely no extreme reading on the put-call ratio. Now, let's go see the NYSE internals. Now, obviously, there's been a huge, but I mean, a lot of damage done in the internals of the NYSE. A few things we have to point out. The bullish percent index on the NYSE is pretty much close to zero. So maybe we have not seen a low on Friday, but I'm sure we're due for a massive rally. Now, if this is going to be the end of the correction, somehow I don't think so. But we are due for a massive rally. Again, in these type of rallies, which are like clearing rallies in bear markets, not a good idea to go short. Raise cash, yes, but not a very good idea to go short. Now, let's go see at that violet line, which is the NYSE new high, new low. Again, you can see that it's down the pipe completely, which is indicative of an ensuing rally. Same thing for the number of stocks on the NYSE trading under their 50-day MA. You can see that the green line is pretty much flirting with zero. These are levels I have never, ever seen in my entire career. So yes, we are due for a rally, but is this the rally to end all rallies? I have no idea. So So that's pretty much the picture on the NYSE for the internals. Now, in terms of Dow theory, remember last month I told Jitney Trade clients that the key was the trannies, and it had to hold that support line. And I mean, once it took that out, it was just game over for the entire market. There was absolutely nothing supporting it. And again, going back to 6 months back, when we had that false breakout on the trannies, remember that the industrials never did follow, so they never did confirm that breakout. It was a false breakout, and basically the industrial is in a free fall ever since the trannies broke that important trend line. Now, possible landing zones, again, notwithstanding a rally that could come at any time, I still believe that the landing area for the industrial is like those two support lines at the very bottom, which is like 7,000, 7,500. The tranny's 3,500, and if that doesn't hold, it's pretty much straight down to 2,500 level. Now, this would be a safe. This is a good area for a rally because, as you can see, the trannies are running into important intermediate support. Now let's go check out what the USD has done. And remember, last time we were saying that the USD was due for a pullback, which we did see. Remember when it first hit the 80 resistance? So from last time, you can see that the USD, the dollar index pullback, it didn't do much for the commodity complex, though. Even though there was a little bounce in the commodity complex, but nothing major. I mean, they were just brutalized. Now you can see that the USD is back on a rampage. It recrossed this secular resistance, which is massive, but massive resistance. And the only thing that could trigger this kind of a rally in the USD is obviously a huge deflationary scare, huge deflationary induced rally, and it's probably not over. Maybe due for a little pullback, but I don't think it's over, far from it. Again, you can see that vertical line coming down. That's when oil started tumbling, and the USD just picked up steam from there. And also, one thing to point out is that gold is accompanying the USD in this massive rally, which is, of course, some safe haven buying. And you can also deduct from this that if gold is going up, it's outperforming oil for the first time in 4 years, which is good. We'll see next time. This could be like after the correction is good. It could. I mean, after correction is over, it could be good for the golds eventually. Now let's go check out who's coming out with earnings this week and stocks to watch. On Tuesday we have CSX, Intel, J&J, PepsiCo. Wednesday, Abbott Labs, eBay, JP Morgan Chase, Novelis Systems, Coca-Cola, Wells Fargo, Xilinx, of course. And on Thursday, we have Bank of New York Mellon, Capital One, CIT Group, Citigroup. So you see the financials, it's like Super Thursday here. Baxter International, Hershey, Nokia, Big Blue, Textron, and of course Big Daddy, as usual, Google, the day before expiry. And finally on Friday the 17th, we have Comerica and Schlumberger. Now, what's on the menu next week? Well, again, we'll look at our Fetish indicators. Commodity complex, see if the golds are coming out of their rut. Option strategies, and also a good look at the USD. And that's about all. That's about it for this expiry. My name is Nicolas Meffet. Be careful.